GCFX once again, and today is 4th of March 2025 and the time is currently 24 minutes past 10 a.m. Nigerian time. I just closed on two different positions this morning in profit, and for the very first time in my trading career I tried something really different today. Usually I trade EUR/GBP or sometimes EUR/USD, but today I traded gold EUR and surprisingly it gave me about $250 to $300 profit. And I want to show you guys that it doesn't actually matter the asset class you're trading. If you have a proven and working system, it should be able to deliver good trades for you on all asset classes. So I want to show you guys the thought process for the two trades that I took this morning and how I was able to catch this beautiful setup. So yeah, let's get right into the video. So here are the two positions I had today. This is XAU-EUR and this is EUR-GBP. That's XAU gold euro and this is euro pound. So I'll see if I can explain both entries properly for you guys to understand, but I'm trying to make the video very simple, short and precise so it doesn't get too boring for you to understand. All right, now the first thing to do if you've watched any of my video is to first of all identify where you think price is actually drawn to on the daily time frame. If you've seen any of my videos, the first thing I like to do is to ask myself, where do I think price is going to be drawn to? Are we expanding higher or we're expanding lower? Okay, and how do you understand or how do you know if price is expanding higher or lower? First thing to know is that price moved from external range liquidity back into internal range liquidity and from internal range liquidity back to external range liquidity. What that means is external range liquidities are simply previous lows and previous highs. Internal range liquidities are the fair value gaps you have inside the range. Okay, so most times price move from taking previous lows and trading back into the range higher, or taking previous highs and trading back into the range lower. Okay, sometimes price trade from inside the range back to attack previous highs or previous lows. So in this case, this is XAU-EUR, by the way. This is daily time frame also. Price traded below this level, okay, below previous lows, and see the way price closed back into the range, rejected back into the range. I always say that no movement of price is random. Nothing you see on your price charts comes or just happens for happening's sake. Every movement of price has a reason behind it, and every price action gives you an idea of what you think price wants to do. Okay, so in this case, price traded below this level and then traded back into the range, and technically all I want to do is to continue the move from Monday. This is Monday trading and this is Tuesday's trading. Very simple. Now if you've watched my power of 3 video, all I want price to do is to open, trade lower, open, creating the low of the day or the low of London, and then trade higher, creating the high of the day or the high of London, and then close right there. It's as simple as that. That's all I want to see or what I'm expecting price to do. Now how do I know or why do I think price will do that? Then I have to go to an intermediate time frame or a medium time frame to find further informations backing up what I think price wants to do. Okay, and then I came to the 1 hour time frame. I want to see if price is actually willing to trade higher. Fine, we have seen on the daily time frame that price wants to move higher, but I also need to still back it up to say, okay, yeah, price wants to still trade higher using the intermediate time frame. This is 1 hour time frame, and then when I came to 1 hour time frame, the first thing I saw was that price traded above this consecutive down close candle, creating a change in state of delivery. Okay, now all this consecutive down close candle, you can see how price closed above it with a body closure. That became a change in state of delivery. That became the idea I needed to get to tell me that price is ready to trade higher. Okay, as at the time I came to price or came to this chart, price was here. Yeah, that was on a Monday. This was Monday trading rather. Price opened right here, and all this price action had not happened then. Now all I needed to still see is, because price already closed above here, signaling a change in state of delivery, where do I think price will come to before we shoot higher? And that's when I looked closely and then I saw a fair value gap right here sitting at the discount pricing where I think price will trade into. Now all these were sent out. I sent this out to my community, guys, so you can join my free Telegram channel if you want to see this, or if you need proof to all of this, you can check my free Telegram channel. I'll drop the link in the description so you can follow it. All right, now when price opened, all I needed to see using accumulation, manipulation, and distribution. Remember, I already created the idea that I want price to trade higher, right? Now, that is my draw on liquidity. All I want to do now is to wait for price to trade lower during my session or my trading session, which is ICT London Open Kill Zone, which was 7 a.m. till 10 a.m. Now I waited for price to trade lower and take out liquidity into this zone before I buy, but price did not do that during ICT London Open Kill Zone. Instead, I waited for price and then it gave me an entry during the New York session. Now this became the accumulation, this became the manipulation, and then this became the distribution. It's as simple as that. Then when I waited, price came and traded below here, taking out sell side liquidities and then trading into the fair value gap we had right here. That's all I needed to see. The moment price accumulated, manipulated lower, I knew we might get an opportunity to take a buy. And what is my actual entry for this trade? All I did was to jump on 5 minutes time frame and then I waited for a change in state of delivery. The same thing that happened on the one. Let's go back to 1 hour time frame. This same thing, consecutive down close candle, price trading above it, closing above all these sell candles, became a change in state of delivery. I'll be looking for this exact same signature on 5 minutes time frame to show me that price is ready to buy. And then let's go to the 5 minutes time frame and see if we get something like that. Good. Now price traded into, this is the fair value gap, remember, and this is the sell side liquidity that was taken. Okay, this is the new day opening price. Okay, price opened right here. Now remember, if you've watched my power of 3 video, I said that if I'm looking at buying, I want to be buying below the market opening price. If I'm looking at selling, I want to be selling above the market opening price, and this is the market opening price here. You can see it right there. Price opened right here. Any opportunity I'm looking for should be below here. Why am I looking for the opportunity below that price? It's simply to position myself in the week of the candle of the daily time frame. Remember, the daily time frame is going to have a bullish rejection week. I want to position myself inside that week to catch good, accurate, and good risk to reward trade to send price higher. Okay, price traded lower. This is the fair value gap, and then the change in state of delivery. If you're smart enough, you should see this already. The change in state of delivery happened just right here after price traded above this consecutive down close candle. Now, why is this a change in state of delivery? That's simply because all this sell close candle or all this bearish candle traded below previous low here, taking out liquidity. Now ideally, if it's supposed to be a continuation of the sell or the sell of this internal move, price is not supposed to close above. Price is supposed to respect this level to continue lower. But the moment price trades above it, closing above this level with a body closure, that became a signal for me that I'm ready to take a buy. And price came in, sat there, and then I targeted a 1 to 5, and that was it for me. Okay, now I could have simply targeted a 1 to 2, but I decided to go for a 1 to 5 because I know where the target is. I know where price is actually coming to on the daily time frame. I don't remember, I said when I started this video, I don't want to predict the close of price. Now try not to make that mistake. When you expect price to come to a particular level, you want to be all superhero, you want to be supernatural, you want to take price all the way up. Sometimes price might not do that, especially if you're a scalper or if you're an intra-session trader. All you have to do is just to look for a good price leg. Once price gives you an entry in the direction of your narration or your analysis, you are good to go. That's all you need. A few of that in a week or a few of that in a month will amount to good equity curve. Okay, so yeah, that's that for XAU-AUR. I waited for price, although this trade took about 24 hours. I took the trade on Monday and then I left it to run till Tuesday. That's some level of discipline. Okay, I'm a scalper, but I decided to leave it because this is the first time I'll be trading XAU-AUR. I wanted to see how it played, and then I risked very little. I was willing to lose the money anyway, so I just let price do its thing. All right, so the next one, let's go to EUR-GBP. Okay, yeah, EUR-GBP, it's a very simple trade as well. Let's go to the daily time frame. Let me show you guys what I was expecting on the daily time frame. Okay, now let's see if I can clean all this up just for some, actually. Yeah, just to make it very simple. Now remember, I always say again, I want to ask myself where I think price is going to be drawn to. Very important, guys, very important. I repeat, price is drawn from previous lows or previous highs back into internal range or external range liquidity, previous highs and lows back into internal range, and also from internal range liquidity back to external range liquidity. So when I came to the chart and I saw this, I saw that price traded below this level initially, okay, and then this current candle had not printed. Then I saw that price will trade back into this fair value gap, internal range liquidity, remember guys, and then we had a bearish order block right there, and then that order block is also coming from a previous bearish fair value gap, which means price has to, after trading below this level, price has to trade back into the fair value gap, which is internal range liquidity, and all I have to do is just to follow price. So technically, using power of 3, this candle had not printed. This was what I saw. I'll be expecting price open, low, high, then close. Very, very simple, guys. That's all I wanted to do, or that's all I need to do. And then I just go to the daily time frame, 1 hour time frame, and then see if there's any information I can add to it. And then when I came to the 1 hour time frame, I saw that price all through yesterday, which was Monday, 3rd of March, price was just dancing inside this fair value gap, and then I did not take a trade right there. I waited for price, and when today's trading opened, all I wanted to do was to see if price was still going to continue this range it was doing, or to give me an opportunity to trade outside the range. Now most traders, or some of us, make this mistake of saying don't trade a ranging market, you wait for breakout. Sometimes you can also actually predict the breakout and trade from the range outside the breakout, or creating the breakout. Okay, that's advanced. You can study that later. Okay, now this is today's trading. The market opened right here, and I want to look for an opportunity below. Remember, below the market opening price or around the market's opening price. If you're not trading below to look for a buy, you're trading around, very close to the market opening price, so that you'll be close to the wick to actually get good risk to reward. Okay, now price gave an opportunity to trade outside the range. This was a very choppy price action, and if you are not experienced, you might get lost in this. All I needed to do was to wait for price, wait for London opening, ICT London opening Q zone, that's 7 a.m. UK time to 10 a.m. UK time and then to see if price will give me an opportunity to trade higher. Very simple, guys. Now 7 a.m. opened right here. 7 a.m. opened right here. Also, although I saw that we started creating order flows, price traded into this fair value gap. You know, when I saw that price started respecting bullish order flows, taking out previous low, take out liquidity, trade higher, take out liquidity, trade higher, I saw that price traded into this fair value gap and then moved. I was waiting, and then when 7 a.m. opened, remember the rule, I want to see what that manipulation will do, and then price traded below this level right there. The moment price traded below there, I was waiting for price. Remember the change in state of delivery. Very simple, guys. All you want to do, or all you're waiting for, is to see price close above the level or the move that took out the liquidity area, and then you are good to go. Now this was the sell candles that took out this previous low, right? Two reasons why I took this trade. You have an inverted fair value gap. Let me see if I can mark that out. Inverted fair value gap. Good. You had price inverting this bearish fair value gap and then creating what? A change in state of delivery right there. The moment I saw that, I was really confident that price was going to shoot higher, and then I placed my trade using the inverted fair value gap, using a 4 pip stop loss, exactly 4 pip stop loss, and then I targeted a 1 to 2. Now my trade, or my take profit, was targeted or was placed at yesterday's high. Let me see, yesterday's high, yeah, right there, for a 1 to 2.1, yeah, and that was my trade. Alright, so it's a very simple concept, guys. It works on any asset class. Just make sure you understand where you think price is going to be drawn to, or where you think price is going to approach, and where you think price is coming from, and then all you want to do is just to wait for change in state of deliveries or change bullish or bearish intent in the direction, and then you are good to go. If this video was helpful, please do not forget to like this video, subscribe, share this video, and drop a comment if you want me to elaborate on anything I said in this video, or you want me to do any video or create any video regarding any topic, any forex related topic. Let me know in the comment section, and then I'll try to do that. Please do not forget to subscribe. It helps the channel grow. Alright, see you guys in the next one, and until then, peace out.